The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, back to work day, everybody. How's it going so far? It's kind of interesting. I'm definitely into the groove here, but at the same time, kind of still feeling a little relaxed from a nice holiday weekend. As Tom and Steve mentioned earlier, I'm out here in Santa Fe, New Mexico. I was in town over the weekend. Big holiday weekend for tourists coming in, of course, as you'd expect. Big tourist destination. And I actually was down on the plaza 3 times this weekend, which is not really something I typically do. You know how when you live in a place, you don't normally tend to kind of hit the more touristy kind of zones. But I was actually down there 3 times. Had some guests in town on Friday, and we went down there. It was nice because there was a Porsche show. A lot of Porsche owners. My nephew-in-law is pretty knowledgeable about these things, and he was telling me that there was a $400,000 car down there. So really, really nice. We got to watch them all drive into the plaza. That was a lot of fun. I was down there a couple other times. As I mentioned to you, I do some animal rescue, so we took some friends of mine and I that work in the rescue. We took a dog down there on Saturday morning, put a little Adopt Me vest on him and walked him around, got some interest. So all in all, nice weekend. Hope you all had a nice weekend too. And now we're back here, and apparently everybody has forgotten about all the problems in Europe. They've all gone away again. If you've listened to the show before, you know that I tend to kind of look a little bit at whatever the news of the day is that seems to be causing some emotional reaction. You know, we're kind of back into these day-to-day swings, which is what makes both some of the long positions and some of the short positions a little bit challenging these days. I'm looking on CNBC right now. Dow has biggest one-day gain since April 17th. Okay, we're only a little bit into the session, though. We know what can happen intraday a lot recently as well. And I noticed little tickers still going across. Oh, they're still talking about Facebook. I feel like we've moved on from Facebook. I know I have. I mean, just in terms of obsessing about the stock, I never really was obsessing about it. As I've mentioned here before, best not to jump into a new IPO. Let it develop its trading style. You know, I think everybody's kind of written this thing off. I think there's a bit of, what's that German word? The Schadenfreude, right? A little bit of perhaps feeling glad that Zuckerberg and company may have botched the IPO somehow. I don't feel that way, but I'm picking up a little bit of that out there. It doesn't mean this stock is going to be a perennial loser. Does not mean that at all. This thing could eventually become a big winner. We just don't know right now. Better to let it develop its trading character. When it does clear a consolidation in a bull market, could be the time to jump in there. So yeah, another interesting day. Like that old Chinese curse, we live in interesting times. We certainly do. I've put up a chart there on Tiger TV of the IWM, the Russell 2000 ETF, seeing a nice move up today along with the other indices. Now, just to remind you, we do have, if you are new to the show, new to TFNN, we have the Low Price Leaders newsletter. You can get information about that and take a trial. That's on the homepage of TFNN.com. And what I do there, I look at not only the small caps. Obviously, the title of this show is the Small Cap Roundup. So we're looking not only at stocks with a market cap of below $2 billion, but also of stocks that are trading between the $5 and $12 level, because those are frequently the lower price names that are often just in a very, very good price position for the institutions, the mutual funds who specialize in the smaller stocks, to begin buying some of them up. So this is the focus of the newsletter and the show, of course. Now, in the newsletter, what I do is I give you some of the watch list names. We're obviously, despite today, we are still in a downward trending market. We have not seen a new rally confirmed by significant price action accompanied by heavier than normal volume, which is a decades-old proven method. I mean, you can backtest this at least as far back as the 1930s. And actually, as far as I'm aware, I think that backtesting is being done back to the 1880s to show, on the Dow, of course, to show that this is a method of identifying market turns. So that has not been confirmed as of today. So that's why I'm still kind of in watch list mode here. It's still too risky to jump into new positions at this point. But it's a terrific time to be tracking stocks that are setting up in good, sound chart consolidations. I want to see moving average support. I would like to see, preferably if you see sort of tight weekly closes or narrow trading ranges as these bases are being formed, that's often a bullish sign. A stock that doesn't necessarily correct more than the general market. Although you have to keep in mind, with a lot of these smaller, less liquid companies, these growth companies, the small cap names, the lower priced ones, they will tend to pull back further than the general market does, meaning the major indices. So it's not unusual to see that, and then for one of these stocks to come back and post very healthy price gains when a new uptrend does emerge. Let me show you one that I was tracking. I am no longer considering this a watch list name, and we'll talk about, this is a good example of kind of what I am looking at. So this is Francesca's Holdings, and I'll put it up there on a weekly chart. FRAN is the ticker. So you can see on a weekly basis, this has declined pretty darn sharply from its highs. Now, this is also a very good illustration of why I will never be using fundamentals as my indication that it's time to make a buy or sell decision. This one has had double-digit earnings growth in the past 4 quarters or so. It's had double-digit sales growth. Let me see here. It had sales growth of about 55% most recently, so that's pretty good. This is a women's clothing store. They have about 250 locations throughout the country. And, I mean, you can just see right here, this has suffered quite a bit, appears to be, had a little bit of a rally last week, rallying so far today. So we'll see what happens here. So this is an excellent example of why I'm just not going to use the fundamentals or to be relying on something like, hey, it was a winner prior. This is a recent IPO. It has a lot going for it on paper. The chart is just not showing me that this is a watch list name. This is a small cap, market cap of about $973 million. So could it come back as a watch list name someday? Of course. Never say never. Never write anything off. I think that's another problem that you see, particularly among kind of older school investors. I think maybe people who kind of learn to invest from the more fundamental rules that were more prevalent before charting became more popular in the past maybe couple of decades or so. A lot of people think, well, that's a good company. Well, what's a good company? I mean, really. And just then, whatever that means, even if something is quote unquote a good company, and seriously, I don't even know what that means anymore. I have no idea. Maybe they mean fundamentals. Maybe they mean brand equity. A lot of companies have good brand equity, but that doesn't necessarily mean they're a good company. or they were, popular a decade, 20 years ago, had good brand equity then, but no longer do, but people kind of remember them well. Doesn't mean it's something to hang on to or still consider a good investment decision. So, okay. So Francesca's Holdings, something that was previously a watch list name, is no longer. Let me see here. I was going to talk a little bit today about something that I was looking at a little bit over the weekend, kind of between trips downtown to the Santa Fe Plaza. I was doing the normal thing I do. I'm sure a lot of you do, kind of catching up on a little bit of market reading, checking some charts, kind of what all of us who are traders, who are interested in the market. Now, one thing, as many of you know, I do a lot of work for MoneyShow.com. In fact, I'm going to be at their Traders Expo in Dallas next week. I mentioned that the other day. And I will not be at the booth. I'll be in the video studio. I apparently will be at the booth, the MoneyShow.com booth, at about 1:30 or 2 p.m. on Thursday afternoon. That's going to be it. So if you're there, swing by on Thursday afternoon, say hello. Would very much like to meet you. One of the things that comes up in a lot of the work I do for them is MLPs, Master Limited Partnerships. And, of course, this is something, of course, the dividend yield has really attracted a lot of investors, not only in volatile markets, but, of course, in a low interest rate environment, as investors and advisors are seeking dividend. So there's a few that I just wanted to take a look at today. Let me put this up here. Let's see. Oh, I've always got so many keyboards going on here. Let's see. Oh, Joe saying, yeah, Santa Fe. Right. Yeah, there are some good restaurants. I was actually I was up at El Farol on Saturday night, not for dinner, but there's bands that play up there Saturday night. Quite an interesting scene. But yeah, El Farol is a nice restaurant. Quite a few good chefs that come here. So yes, absolutely. If any of the TFNN crowd is out here ever, send me an email if I'm available. Maybe we can grab a cup of coffee, whatever. But, yeah, it's a great place. Okay, we have BPEB. Let me say this right. BBEP. That's a little tongue twister. Brightburn Energy Partners. And this is one of those master limited partnerships. Now, this one, it's correcting right now. The price action not doing so well. You know, the reason you would sit through this one right now, it's got a dividend yield of 10.8%. Now, this is a small cap. I am going to be looking at a little of these, a few of these small cap MLPs. Market cap of about a little bit shy of $1.2 billion. So take a look at this. I'll leave the chart up there during the break. We'll come back, look at a few more MLPs, talk a little bit about some of the yield on these today. I'm Kate Stalter. This is the Small Cap Roundup.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, we are back. Taking a look at some MLPs here, some of the smaller cap MLPs. I am typically more growth-oriented. However, always good to take a look at some of these dividend plays. I have in my overall portfolio. Small caps are not all I trade. It is a particular area of interest to me, but I do have certain other dividend stocks and other areas of my portfolio, and the MLPs are something to take a look at just because of these yields. Let me give out the phone number, 877-927-6648, 877-927-6648. We can take a look at some ETFs, put up some stock tickers up there, anything you want to talk about. And just so you know, I know we do often get a lot of new listeners here, and I do buy into strength. I'm not looking to buy something that's falling to either 52-week lows or just in a stock that is in a time of consolidation and not showing any technical strength. Way too risky. I mean, we just put up the chart. We had the chart of Francesca's holdings up there a minute ago, and I'm going to put it back up there just for a second, just to review. Okay, so this is not a stock I would buy right now, because even though, let's see, actually looks like we may be a little bit to the downside again today after showing some initial gains. Yeah, trading lower today already. So yeah, this is not the kind of stock that is showing any technical strength at the moment. I'm not really interested in trying to guess whether or not it's at a bottom. Now, I was going to move on and talk about some MLPs, but while I'm on a daily chart here, the tight trade in recent days, that could bode well. If this, in fact, is at a bottom, that could bode well for this stock because it's obviously getting support right here at this level. It's below its 200-day, but you can see somebody's propping up shares here. So that could be a good sign. Nonetheless, I'm not going to try and guess. I would like to see it above some key moving averages, at least that 50-day, potentially even some shorter-term moving averages. Okay, let me go back to something I had up here a moment ago. The ticker is CLMT, and this is a small cap MLP Calumet specialty production partners. So, most of these MLPs, they tend to be involved in the transport of oil and gas products. This one's actually in the production, refining industry. So you're seeing it branch out a little bit, and there are actually some analysts who are looking at whether other categories might be appropriate for the MLPs. It seems that they would be. And basically, it's the tax structure of these. I'm not a tax expert, but that is for the tax experts, for the advisors out there. That's why they like to put their clients in there. And you do get the liquidity that you would have with a publicly traded security like a stock or an ETF. So that's another part of the appeal here. And, of course, in this low interest rate environment, let me see here. This one here, Calumet Specialty. This has a dividend yield of 9.7%. Okay, so you can see that this one is correcting as well right now. Let me go put this on a daily chart so we can see where it is in relation to the 50-day average, and you see that it's below that, but holding above that shorter term, actually, I'm sorry, holding above the longer term 200-day moving average, but getting support let me say that again. It's below. I'm looking at the chart here and trying to look at some of the fundamentals and not really having good luck talking and reading at the same time. Funny how that works, especially after a long holiday weekend, right? So yeah, so you see it's getting support above the 200-day but below the 50-day line. So, again, you've got that outsized dividend on here that could make you give you some reason to sit through a correction on a name like this that you might not with a typical growth stock. Let me put up another one up here. FGP is the ticker. FGP, and you take a look. Now, this one, too, is another one of these small cap MLPs that's correcting. I don't really like the chart on this one. Feral Gas Partners. Feral Gas is one of those propane distributors. You see those all over the country. But this one is structured as an MLP, and I've got, we'll come back. We'll talk a little bit more about this one, and then I'll move on to some medical names that I'm also looking at. I'm Kate Stalter. This is the Small Cap Roundup here on TFNN.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back. I'm Kate Stalter. This is the Small Cap Roundup. And just I was taking a look at some of these energy MLPs a few minutes ago. Now, I understand kind of along those lines, not really an MLP, but we do have Mohammed calling in from Glendale about HNR, Harvest Natural Resources. Hi, Mohammed. How are you? I know we've talked before, haven't we?
Yes, we have, Kate. How are you? Thank you for taking my call.
Oh, good, good.
I know the chart doesn't look good, but it just got hammered in May, as you could see. But I was actually interested in this as a takeover, and I just got into it maybe about 2 weeks ago at 566, and I was wondering if I should hold on or bail out.
What was your stop on this one? What was your stop loss?
I didn't put a stop on it, unfortunately.
Oh, no.
It went down, and today has, rebounded some, but I'm still underwater.
Yeah, let's see. And you said you bought it at what price, did you say?
566.
At 566. Okay, so it looks like you're at about 554 today. So even if you would put in, let's see, what would a 10%, if you put in a 10% stop loss on that, to say about 56, 57 cents, you haven't fallen that far yet. So, and I know on a lot of these kind of smaller, thinner names, you have to give them a little more latitude here. What I would say to you is, if it drops down to $5, I would put in a stop at $5. That's just me. What I would do, I would put in a stop at $5. And if it falls below that, just get out. And you can always buy it again, right? If it starts to rally again, you can always get back into it.
Okay.
But I just think the use of stops is crucial. Just to have a plan. So far so good. You're rallying today. You're reapproaching your buy point. So good luck with that one.
Thank you so much, Kate.
All right, Mohammed. Good to hear from you. Call again sometime.
I will. Thanks.
All right. Bye-bye. Yeah. That's a great point. It's just to always have some kind of a plan for your stocks. Just have some kind of stop loss. Even if it's just something that is on paper that you don't even necessarily put in the order with your broker, then obviously you can do that with some of the online all of the online brokers. If it's the kind of thing that you buy a stock and you're not going to be around during the day or in a position where you can be checking your investments, you can even put in little alerts on your smartphone. So if you're out and about during the day, you can have the alert pop up on your smartphone. So there's a lot of ways to put in that stop, or you can just do it automatically. So that way, very common. Many of us suffer from this sort of idea of, okay, well, it hit the stop loss, I'm just going to give it a little more time. That can be dangerous. And a lot of times it will rebound. And you might be a little bit regretful that you sold it at the stop loss, but many, many times it's better to protect that. Oh, actually, you know what? I'm going to go back to my example du jour up here. And I'm going to go back to Francesca's. I don't have the exact numbers in front of me right now. I was in this stock, actually. And I did have a stop loss. And I sold it. And I believe it briefly re-rallied back above that stop and retook that price. And I think there was a moment in there I was kicking myself a little bit. Not anymore. So, Mohammed, if you're still listening, just kind of keep that in mind. That just make sure, and for everybody, it can be hard. It can be hard, but it's definitely important to have a plan. And also a plan to take some profits. Now, that's a little bit different because that can be a case where you might, when it reaches your initial target, say you give it 10%, and that's frequently what I'm doing these days, and it's going to take a long time, I think, for some of these to get there right now. But when you do hit, say, that initial price target, then you reassess. You might want to take some of your money off the table, put it into something else, depending on market conditions at the time. Or you might want to, if the stock is acting well, if the general market is acting well, you might just want to let it run. The old saying, let your winners run. So that's something that really has to be reevaluated on a case-by-case basis. And I know some people like to use a formula of if a stock is 70% above its 200-day moving average. Others say that's not so reliable. I can tell you for a fact that has worked in some cases. I don't know about empirical studies of that. It may just be sort of one of those things that I'm looking at some anecdotal evidence. But the formula of taking some profits when your stock is 70% above your 200-day line, that has proven effective in some cases. And once again, there I can't tell you whether or not that's I'm only giving you anecdotal evidence. Can't tell you about any empirical studies. That would be some very interesting research to do. However, okay, let's move on. I wanted to take a look today at some other names, as we've been mentioning here in the ads, and I've been mentioning on the show. In addition to our radio show that we host here of the Small Cap Roundup, there is also the Low Price Leaders newsletter. Now, here's a name I just put up there. It's Acorn, AKRX. I'm going to put this up on a weekly chart. Now, this is one that I began tracking way back when it was a much lower price name. It's actually trading at about $13.70 today. This is Acorn. It's a pharmaceutical company, and you can see here on a weekly chart, it's had a nice rally. Let me put it back here on the daily so you can see how it's acted relative to its 50-day line. Had a nice rally up here, and then this year, now it looks more volatile on a daily chart than it does on a weekly. Okay, so you have here actually what amounts to a pretty good double bottom formation. This would not be a triple bottom because that did not undercut the previous low. So you had one low here, made a rally attempt, pulled back, then rallied again. So you have one leg down, second leg down. You notice that second leg down undercut the first. Now, why that is frequently something to look for is that it's kind of a little bit of capitulation within the stock itself, showing you that there were a number of the traders or investors who had just given up on the stock, and that happened back in April, and then the market itself went into rally mode right around that time. And you see that Acorn rallied along with it. Now, Acorn held up a little better. You see here, then obviously the market itself went back into a downturn after that short-lived rally attempt back at the end of April. Acorn's held up pretty well. It actually rallied to a new all-time high earlier this morning of $13.96. And then you saw a little bit of profit taking after that, trading right around the $13.70 level right about now. Holding up very well above shorter-term moving averages. It's holding above that 10-day line. You know, in a bull market, this one could be considered in a buy zone at this particular time, as it is holding up and consolidating a bit. But, you know, in these particular market conditions, as I started out the show today talking about, we don't have any confirmation of a new market uptrend. So, really, just not a great idea. It's a little bit playing with fire at this juncture right now. So that's Acorn, and that one, let's just kind of recap. So that one I would consider right now in the small cap watch list area. And by the way, we do update the Low Price Leaders newsletter tomorrow. This could be one that does appear on the revised watch list. Wouldn't be surprised. I like this one right now. I'll kind of have to run it through a few more on my screens. This could be exactly the kind of name that you would be seeing on there. So this has a market cap of about $1.3 billion. Good liquidity, trading about 1 million shares or so a day on average. You've had weekly volume a little bit below average or just about average lately. Not uncommon in the past year or so to see stocks rallying on low volume. I know historically many of the growth traders and investors prefer to see heavier volume as a stock rallies. You know, a lot of analysts say that's just been the effect of quantitative easing. You've got so much of this money going into the market, free money, cheap money, that a lot of the traders are just having to put it somewhere, so they may be going into these baskets of stocks, so you're seeing uptrends on lower volume. Price is going to be the fundamental, let me say that again so it's not confusing. Price is going to be the primary indicator of how I'm going to be making the buy and sell decisions. Volume will be secondary. Fundamentals do not enter into it at all as part of the buy or sell decision-making process. As far as screening for watch list names, they do. Now, don't forget, a lot of these medical names, some of these biotechs that actually Acorn is a good example. This took several years for it to become profitable. It showed losses up through 2009, and 2010 became profitable, so now the profits are picking up. You are seeing the institutions come in. Now, with a lot of the biotechs with a lot of potential, and which often are viewed as perhaps acquisition targets or just have good technology in the pipeline, and there is some revenue somewhere there. A lot of these can be purchased as sort of special case stocks where there are no earnings, but there is a track record of revenue and solid price growth. And I realize that it is kind of similar to what we saw in some ways in this particular subsector. It is a little bit similar to what we saw back in the late 90s, 1999, with the dot-coms. And I know many of you are familiar with the work of Chris Catcher and Gil Morales. And this is something that Catcher had mentioned in something he had written a while ago, that back in the late 90s, that was something he was looking at. A lot of these tech names that he realized did not have the earnings track record that he would typically be looking for in a top-performing growth name. Nonetheless, the price performance was there. You just have to have your technical sell rules in place and know that, for example, if a stock falls a certain percentage below your buy point, you're going to sell, like we were talking about earlier. If it slices, it's 50-day moving average. So there are a number of things there that could make some of these biotech special considerations. Now, Acorn is not. At this point, Acorn is profitable, terrific track record of revenue growth, and we are seeing some good estimates. I do watch the estimates. Analysts are expecting 50% profit growth to 54 cents a share in 2012. Let me take a look here. Flip over to my other screen here for 2013. Okay, another 26% growth expected in 2013. So this is not, again, that's not something I'm going to be using when I'm deciding whether or not to make a buy in a stock. It's a pretty good screening mechanism, though, because it can show you the degree of institutional confidence in a company at any given time. Okay, let me move on here, and let me go to something called West Pharmaceutical. WST is the ticker on this one. And oh my goodness, this segment is just winding down quickly. So this is another one that is showing a pretty good rally recently. I've got it up for you there on a daily chart. Let me move it over to a weekly, and you can see how it's moved out of this steep consolidation. This is another small cap market cap of $1.6 billion. This is a medical supply company, very thin trade, about 165,000 shares a day on average. Let me come back to that. I want to remind you before we go to break here, Basil Chapman's all-day webinar on identifying chart characteristics and patterns. That's Friday, June 8th. Just want to let you know about that. You can get more information, tfnn.com. Basil is terrific, great chart analyst, and I'm sure that's going to be a lot of fun and very insightful, so you want to take a look at that. I'm Kate Stalter. We will be back in just a moment with the last segment of the Small Cap Roundup today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, welcome back to our last segment today. We probably have time for a quick phone call if you want to call in, 877-927-6648. I'm noticing in the past 25 minutes or so, ever since the European close, definitely lost some altitude, to stick with our Tom Petty Learning to Fly theme song there. And last I looked like the euro was declining a bit right there, so I've got that up on my other screen right now, but not surprising to see the U.S. markets pulling back along with that. And yeah, I am noticing the networks are still talking about Facebook. You gotta be kidding me. Okay. All right. What I put up there on the screen is AMSurge. AMSG. Okay? So what this is an interesting company. This is a Franklin, Tennessee company that operates those outpatient surgery centers, and there's a few of them. There's at least 2 of those that I know of that are right here, not necessarily owned by AmSurge. I'm actually not sure. But right here in little old Santa Fe, we have at least 2 of those surgery centers. So these things are becoming more and more popular, where the doctors will not actually do their surgery in the hospital, but they will do it at these other private surgery centers. So this is, let me see here, just taking a look. We've had some revenue growth acceleration over the past 5 quarters. Also, you've had earnings growth trending quite a bit higher. In the most recent quarter, earnings were 50 cents a share. That was a 35% year-over-year gain. Analysts see double-digit earnings growth. So the fundamentals look good. So that would meet some of my screening requirements in this case. You have here a small company, market cap $878 million. Very thin trade, about 144,000 shares a day. That can add to the volatility, can add to risk, because what that can mean is with that kind of thin trade, you could have one institutional investor who's a pretty significant shareholder who could just exit for whatever reason. They want to put the money somewhere else. They visited the company. They saw something they didn't like. I mean, there's just any number of reasons. Doesn't have to be something in the news that you see. Now, this one has a beta of 1.17. Okay, so that's an indication that there is some volatility, and you can kind of just really glance at this chart without even knowing the beta. You can look at the weekly chart, and you can see some of these intra-week price swings right here. Now, let me go to a daily. There are all of that being understood. I like the support here near the 50-day line. You know, in a volatile stock, you've had some kind of price swings on the way down here. I am liking that 50-day support. Continuing to consolidate in a fairly orderly fashion, considering this is such a small company. But this is one I'm not quite sure yet. I'd have to kind of study my screens a little better. Not sure this would really necessarily reach watch list status at this point, but could be something going forward. You know, just for fun, I'm going to put the one of the medical sector leaders up here. It's a big cap, definitely not a small cap. It's one I track. I'm sure many of the growth investors out there have been tracking this one. I know Basil watches this one sometimes too. Alexion Pharmaceuticals, ALXN. You're seeing it's rebounded back above that 50-day moving average, so holding up pretty well. This has a market cap of nearly $18 billion, but it is good to watch really what some of the leaders in the sector are doing, even if you do track the smaller cap names. I'm Kate Stalter. It's been a lot of fun joining you here again today. As always, I will be back on Thursday, and have a great couple of days. Until then, check out the Low Price Leaders newsletter on TFNN.com.